Ladies and gentlemen, welcome back to the channel. We have all you need to know about this upcoming week and what's coming for markets. All of your major events and my expectations, brought to you free 99 from the east coast of Florida. Check it out. We're doomy and gloomy outside today. What's going on? Just my luck. Nonetheless, ladies and gentlemen, let's get rocking and rolling. I think we're pretty well aware of the major event this week. That is the election and what ramifications come with that. We all know at this point the negatives associated with this election. No matter who wins, if there's a sweep, that's bad. That means if the Senate goes red or blue, if the presidency goes red or blue, if they both go red or both go blue, you know, that's not great. There's more so a Republican sweep that is the concern from Wall Street's perspective. I think we'll get over a sweep pretty fast. The thing I don't think we'll get over fast is if the election is contested. That's the bearish argument for this upcoming week. It really has to do with the election in its entirety. As long as there is no sweep and as long as there is no contested election, then Wall Street is going to rally after the election. That looks pretty likely, just given the positioning that you're seeing out there. I mean, look at the VIX for an example. VIX is sitting just under 22. Like there's a lot of puts out there. There's a lot of shorting activity taking place out in our markets. What do you think happens when the event comes and goes? Short sellers, hedgers, they say, oh yeah, we probably don't need to be short anymore. And they go cover on those short positions. As long as we don't have a contested election and we don't know who the president is or a sweep that the markets do not like, then you will see a lot of shorts covering on short positions. You will see the markets go higher after the election as long as it's not a sweep and not contested. Now, the other side to that is if we do have a contested election, there's not going to be much buying taking place. There's not going to be as much liquidity in markets. And you might see people adding to those short positions because of that uncertainty. And when there's not a lot of buying pressure, but there's a lot of shorting, you can get pretty aggressive downward moves in markets. And that is really the main risk for stocks this upcoming week is the election. Now, we also have the Fed on Thursday, and let me just tell you, the Fed does not like what's going on right now in Bondlandia, okay? The Fed cut rates 50 basis points. Why? To try to accommodate the markets, to try to push bond yields lower, maybe send mortgage rates lower, get people buying into homes again, you know, allow for business lending expansion. The opposite of that has taken place, mostly due to the election, mostly the Trump trade that has gotten priced in the markets. I do not believe in the Trump trade whatsoever. I do not think we'll see higher inflation and more government spending. I think it could be the opposite of that, which in the near term, again, is kind of negative for the economy. Markets love when governments deficit spend. It's kind of stimulative. But I don't think that is what we're going to see. Long term, that's going to be great for the country. But I guess to be decided because we don't know who the president is going to be. All in all, I don't believe in the Trump trade. But again, back to the Fed on Thursday. Hopefully by then we know who the president is going to be. If we do, great news. Markets are probably moving higher. The other part of good news is the Fed is going to be very bullish. They're going to be dovish. They're going to sound like they're not worried about inflation, that yes, they're still watching it, but they see the risk to economic activity much greater to the downside than the risk of inflation to the upside. They're going to say nothing has really changed our expected path of interest rate cuts. They're going to say, look at the last dot plot. And that's pretty much what we're still expecting, right? You're going to hear confirmation of the bull thesis for the Fed, the accommodation thesis from the Fed. And that is going to be comforting for markets. Now, if we have a contested election, I don't think the markets are going to care too much about what the Fed says. If the markets are moving higher following the election, if there's not a contested election and there's not a sweep, then the Fed's just going to add more juice to that rally. And honestly, I think it's about 50-50. It's hard to predict what's going to happen with elections to begin with, and that's where it's 50-50. It could be contested, it might not be. If it is contested, that's bad. The Fed's not going to save the markets in a contested election kind of environment. But if it's not contested, markets are going to go higher, and the Fed's just going to boost the markets even more. Now, I do want to be very clear. I don't like big tech here. Even if we get the bull thesis, the bull scenario plays out, I think probably 80+% of the upside in the markets is going to come from small caps and mid caps, biopharma, maybe not healthcare. We'll see. Who knows? Healthcare gets a little weird during presidential cycles, but I think it would be a broader rally than what we've seen in recent weeks. So I would just want you to be a little bit careful there. Even if you are bullish on our markets, I think being bullish on certain areas over others makes the most sense right now. Next up, we have earnings. Now, the bulk of earnings is over with. The, almost 40% weighting in the S&P that big tech has is pretty much over with, besides Nvidia. Nvidia comes out the week of November 20th. So we have a couple of weeks still until we get Nvidia. But we will continue to get Nvidia adjacent companies, if you will. We have Supermicro Tuesday and after hours. They're going through a bunch of drama right now. So I don't know how much that's going to move Nvidia or affect the markets. Supermicro's just up shit's creek. I don't even want to get into it, but their accountant just quit and said they could not be a part of the company anymore because of basically the shady stuff that's going on there. So that's a problem. Wednesday and after hours, you have ARM that reports earnings. They do create a pretty lockstep sympathy move with Nvidia, so that is one to definitely be watching for. Qualcomm reports Wednesday and after hours. You have Elf, Clover, AppLovin, Mercado Libre, IONQ, and others Wednesday and after hours. Wednesday pre-market, you have Celsius, Novo Nordisk, CVS Health, Aora, Teva, Cedar Fair, Toyota, and a couple of others. Again, just to go back, Tuesday, Supermicro's really going to be the biggest one on this list. And Monday, you're going to have Palantir, Cleveland Cliffs, Hims and Hers, Win, NXP, and a couple of others. So really Wednesday starts off more of the larger company earnings for this week, and what could move the broader markets like Qualcomm and ARM. Now Thursday you will have Vistra Energy, Moderna, Barrick Gold, Datadog, Halliburton, Cameco, Hershey's, and some others. Thursday and after hours you have DraftKings, Arista, Block or Square, Rivian, Unity, The Trade Desk, Affirm, Fortinet, Pinterest, Airbnb, and then Friday you have Sony and a couple of others. So earnings this week are not going to be the big catalyst like they were last week, but they still could be important, specifically SMCI, Supermicro, ARM, Qualcomm, right? Palantir to a lesser extent, maybe for the small and mid-cap guys. So still could get some bigger movers here, but it's not a big earnings week as far as large companies. Now, we do have some economic data coming out this week. On Monday, you have a 3-month, 6-month, and 3-year bond auction. If demand comes in good for those, that would be good news for bonds. Tuesday, we're going to get exports and imports that will affect the GDP estimates for the quarter that we are currently in. So if we go ahead and refresh this, we're expecting 2.3% GDP for the fourth quarter of 2024. So definitely coming down a little bit. This is down from 2.7% on October 31st. So you've already come down quite a bit. Real gross private domestic investment growth decreased from 2.9% and 1.1% respectively to 2.6% and 0.4%. So some of these data points will start to impact Q4 GDP estimates as well, since that is the current quarter. that we are in. Now, you also have ISM services PMIs, expecting that to come in at about 53.3. Last month was at 54.9. Business activity expected to tick downwards 0.2%. Employment expected to actually rise 1 point. New orders expected to fall 2 points, and services prices expected to fall about 5.5 points. So that will definitely impact the markets a little bit. That's going to be Tuesday in the morning. So we'll react to that in markets. It's really Tuesday and after hours where all of the attention will go right to the election. So yeah, on Wednesday, you don't have much of anything for economic data. On Thursday, you have the Fed. That's really your main event. And on Friday, you have the unemployment rate coming out from Canada, but you do get Michigan consumer sentiment preliminary numbers for November, expecting things to pretty much stay roughly where they were from last month, not expecting much of a change there. So if things do change, that can definitely cause markets to move. Again, as long as we don't have a contested election or some other negative event this week, I think that consumer sentiment report could be important on Friday. So with that said, if we get the bull case scenario for this week, which is no contested election, we know who the president is Tuesday night or Wednesday morning, we have a split Congress makeup, it's not a sweep in either direction, and we get a bullish Fed, like that's going to be enough to send Tesla stock probably to the 265 to 285 level by Friday. I think the election is the main event. Now, the Fed's obviously important. We do have earnings, as we talked about previously. But in terms of big upside or downside, it really just comes down to the election. And the problem here is I have no idea what's going to happen with the election. Nobody does. Like, I have my own opinions. I have my own hunches. I think, in fact, we're going to know who the president's going to be Tuesday night. I think if you look at the markets, what they're pricing in, Trump's going to win. I think that would be the most likely outcome at this point. I think we're going to know Tuesday night or Wednesday morning in the maybe late morning hours of Wednesday. But would I be willing to bet a large chunk of money on that or bet at all on that? No, I would definitely hedge that bet because, I mean, I have no idea with any certainty what's going to happen. So as long as we don't get the more worst case scenario, contested election, all of that, then you are going to see Tesla stock do very well this week. Now, I think the Fed's going to be bullish. I think earnings are going to be really good. And I think there's a fair bull case to be had for this week, why stocks would go higher following, for sure, Thursday, right? Tuesday, the election, that's going to help send us higher. And then Thursday with the Fed could really send things home. We do have some data, as I showed you, mixed throughout the week. But I don't think that's really going to move the markets too much. Now, in the case of Tesla, as I showed you in the video that came out last night, go check that out if you have not done so already. We looked at the option activity and the positioning. It is very bullish for this upcoming week. There's 2 times as many calls sitting in people's brokerage accounts currently than puts. Now, is that the end all be all? Does that mean Tesla stock is guaranteed going to rally? Obviously not, but it's a pretty good sign if people are willing to put their, positions and portfolios on the line to make a bet for further upside or make a bet for further downside. So Wall Street is definitively saying Tesla stock could have a good week this week. And I think in that bullish case scenario, again, you're not going to see big tech be the outperformers if we rally after the election. It's going to be small caps. It's going to be interest rate sensitive companies that revolve around the bond yields. And Tesla is that company. Tesla is the definition of that company. Now, mix in there, Tesla just had the best earnings out of all big tech names. I think Tesla had the best earnings of any company so far this earnings season. I can't think of another company off the top of my head that's had better earnings than Tesla. I mean, Tesla's earnings were just crazy good. So from that perspective, I mean, there's a solid reason to bet on Tesla in the short term, medium term, longer term. Tesla's still down almost 40% from all-time highs. I think there's a very attractive risk to reward profile for Tesla. Again, assuming we have a soft landing as the markets are pricing in. I think that's going to be a bigger concern towards the end of this year, towards 2025, is the economy, because I do think the economy is probably going to continue to slow, and we're not really priced for that. That would catch Wall Street off guard. Even though we just had a 12,000 jobs report print, you would expect Wall Street to be maybe a little bit more comfortable with the idea of a couple negative payroll reports, or maybe, getting closer to recessionary territory. But we're not. We're still expecting that things are going to be pretty good for the broader market. So I think that's a longer term risk over the next 3 to 6 months. Again, I've had the same stance here on this channel for really forever. We're not going to know if we're actually experiencing a soft landing or a hard landing until probably midpoint 2025. Upon the, first Fed cut, you don't usually go into a recession until 6 to 9 months later. And the Fed cut rates in September. So 6 months later would be Q1, but the end of Q1, really Q2 of 2025. And 9 months later would be like midpoint of 2025. So I think that's where we kind of need to hold some cash for a while. I know it sucks. If markets go higher, you want to be invested in this market, but you also want to have some cash available to buy things if that opportunity is presented to us. So let me know what you think about this information down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.